Chief Executive of the Petroleum Commission, Egbefebo Jr., has revealed Ghana's second oil licensing round will delay in the wake of the COVID-19 pandemic. Quite a number of oil firms have expressed interest in acquiring oil blocks, but Mr. Febo Jr. says the pandemic has made plans uncertain. He was the keynote speaker at an ongoing forum to mark the 10th anniversary of the Africa Center for Energy Policy.
A considerable number of after the first licensing round, 13 potential entrants, including BP, Antoil, Shell, among others, visited the data room and were awaiting the next bidding round and limited negotiation periods to acquire blocks in the sector. All of those intentions are in abeyance today as a result of the pandemic. COVID-19 is likely to delay Ghana's second licensing round as government prioritizes managing the domestic impact of the virus and waits for investment conditions to improve. Licensing rounds that proceed in the short term risk receiving fewer or no bids due to low investor confidence. Under the current circumstances, oil and gas investors will likely be reluctant to commit an exploration budget to licensing rounds in the near term due to the economically challenging conditions and uncertainties created by COVID-19. Looking further ahead, the Commission expects that licensing round activities will be subject to significant uncertainties, stemming both from the unknown length of the COVID-19 demand shock and the duration of the current excess supply. Aker Energy was expected to submit its POD in Q2 2020 and subsequently make the final investment decision to commence the project. The Pecan development is valued at 4.4 billion. It's postponed or was postponed in March 2020 as a result of the COVID-19 pandemic.
The Chief Executive of the Petroleum Commission also highlighted the impact of the pandemic on projected oil revenues.
The revenue forecasts for the year have been significantly affected, largely due to the postponement of the Pecan development. According to Ghana's Ministry of Finance, the total estimated fiscal impact from the shortfall in petroleum receipts, shortfall in import duties, shortfall in other tax revenues, the cost of the preparedness plan, and the cost of the coronavirus alleviation program is 21.42 billion Ghana cedis, or $3.89 billion US, which is 2.5% of revised GDP, with a shortfall in petroleum revenues alone being 5.7 billion Ghana cedis, or $1.04 billion US. Secondly, regarding the impact on work obligations and operations, the ongoing or new projects across Ghana's oil and gas value chain are likely to face numerous challenges in terms of project execution, planning, and risk management. A few of them are worth mentioning here. The first being, the year began with the Commission approving work programs and budgets for E&P companies in the exploratory and appraisal stages. The companies were due to undertake various drilling campaigns, acquisition and interpretation of seismic, geological, and geophysical data. The Iban 1X exploratory well of ENI, Nyankum 1X and Chenchen 1X appraisal programs of AGM, Afina 1X appraisal program of Springfield, exploratory well drilling campaigns of AMNI, Eco Atlantic, and GOSCO have all been postponed. The projects were estimated to cost about $324 million US. It is also worth noting that the initial period of extensions granted some of the companies under the respective petroleum agreements were due to expire in the course of this year. However, the impact of the pandemic has necessitated the freezing of work programs and a decision to restore the periods lost as a result of the freeze.